The big story today is the RBI's motto, "We will do what it takes." Now, after the U.S. Fed and the Bank of England, the Reserve Bank of India's Monetary Policy Committee too went in for a 50 basis point hike in key interest rates. With the latest hike, the repo rate has risen to 5.4%. This is a little above the pre-pandemic rate. The central bank has reiterated its position that India is much better placed than other emerging markets. Explaining the rationale behind the recent rate hike, Governor Das says 50 basis points hike is the new normal for central banks across the world. But in RBI, we take a very calibrated and measured view. Listen in to some of his top quotes from today.
In an ocean of high turbulence and uncertainty, Indian economy is an island of macroeconomic and financial stability. Monetary policy will be calibrated, measured, and nimble, depending on the unfolding dynamics of inflation and economic activity. The focus will remain on ensuring safe and soft landing for the economy. And as I added as a part of my statement, inflation still remains at uncomfortably or unacceptably high levels, and therefore monetary policy has to act, and there are also several uncertainties which are clouding the outlook. So monetary policy has to therefore act. Now, what emerges out of that is that steps have to be taken to contain inflation and inflation expectations. The repo rate actions that we have taken, if you see it in a comparative perspective, although our decisions are primarily driven by our domestic factors and domestic situation, but if you look all around, other central banks today, 50 basis points, if I can say, has become the new normal. And quite a number of central banks are now hiking by 75 to 100. So there is a tendency that 75 to 100 basis point rate cut will perhaps, take over 50. But then in the Reserve Bank, as I said, we take a very calibrated and measured view.
Madan Sabnavis, Chief Economist, Bank of Baroda, with us on the show today. Madhavi, Arora, Lead Economist, Emkay Global, speaking with us, as is Indranil, Chief Economist, Yes Bank. Welcome to all of you and great to have you on the show. Madan, Governor says 50 basis points is the new normal, but it can go up to 75 and 100 basis points. What do you read into this statement? Is this just the beginning of the rate high cycle? Are we in the middle of it, or are we now going to see some tapering from here on?
In fact, I think this was a good clarification to make, because I've always felt that if we do believe that inflation at around 7% is going to remain stable in this particular region and not really go up, there was no need to really go in for a 50 basis hike. And we at Bank of Baroda had actually prophesized that it would be a 25 basis points hike. But now that the RBI has clarified that larger kind of doses are required and others are doing even more, so 50 basis points looks like the new norm. So in this kind of a situation, since we are also looking at another 50 basis points hike during the course of the year, maybe we could be having a single blow of another 50 basis points in the next policy, because going by the RBI's own forecast, it does appear that inflation will definitely be above 6% in the second quarter of this year also.
I recall you saying that you think that it's front-loaded. RBI has front-loaded most of its interest rate hikes. Looking at the commentary coming in from Governor Das today, would you recalibrate that position? He's also talking about a global situation on the horizon, which doesn't look very optimistic.
This is for me or?
Madhavi.
Yeah. So essentially, see, the front loading, of course, I think RBI is largely following global suit as far as the front loading is concerned, to the extent that Fed has almost, reached is near neutral and probably will be getting quite restrictive by the end of the year. RBI is pretty much behind the curve on that front, taking into consideration that their real neutral rate is somewhere in the range of 0.8 to 1%, roughly. So I think the front loading is essentially what we are seeing across the world, and RBI is largely following through in that front. That said, I think to a large extent, that front loading is largely over incrementally. Even as we see further hikes in the Reserve Bank, they will be incrementally much lower than the 50 bits that we have seen in the last two policies.
How much more Indranil Pan, how much more do you see coming in from the Reserve Bank of India, and that tolerance to inflation at 7% is waning, because the governor also does make it clear that this inflation is not something that we can accept beyond a point?
I think he also does allude to the point that inflation is past its peak.
Yes.
And he does point out to certain evidences whereby you can be pretty much sure that inflation is headed south. However, having said that, the pace of reduction in the inflation will be quite moderate, which leads to a belief that 6% plus will sustain for a certain period of time, and only in the fourth quarter of the current financial year can a sub 6% be seen. But now, between after today's policy and some of the points that need to be factored in is that oil is now a sub 100. And if oil sustains at sub 100, that in itself, along with the various other indicators in terms of the metal prices globally and the easing supply constraints have eased. They are still tighter than the historical levels, but it's definitely significantly off its peak. So what I'm suggesting is that 7% is not really likely to be a sticky one. We will see inflation coming down, but it will be more moderate. The inflation expectation survey also that came out indicate that both the current expectations as well as the 3-month and the 1 year ahead expectations have dropped. The governor also said that it has dropped, but it's still at a relatively higher level. And that's the reason rate increases will continue. I'm not sure whether 50 basis points is the norm in India. We think that we are more or less likely to see the tail of the interest rate increases so far as repo rates are concerned from the Reserve Bank of India. Okay. The next policy in September, we are looking at a 35.
All right, so 50 basis points is not the new normal. Is it very difficult to make that prediction right now, Madan, looking at what's happening? I mean, even as we speak, we don't know where all of this activity in the Taiwan Strait is going to go. Most people are hoping it eases off and, China will be happy with the bluster it has shown so far. But it's unpredictable, isn't it?
Yeah, absolutely, because I think when we're talking about 25, 35, 50, it's all based on subjective conjectures about what the MPC is looking at. And like just now Indranil said 35, that also makes sense, saying that we go to 5.75. It could also be 25 and another 25. So I think these are just the kind of thoughts which come in the economist's mind when we have to take a call on it. But I think at the broader level, I think what you mentioned is very pertinent, because we have a problem in Taiwan. We're not quite sure if it's going to become another Ukraine, because we should remember that even when Ukraine started off, none of us thought it could have these kind of ramifications. In fact, the immediate reaction was that, look, we don't have much to do with Russia, we don't have much to do with Ukraine. But then the repercussions did turn out to be quite severe, affecting things like edible oils and even something as like wheat. So right now we're all looking at the semiconductor industry and Taiwan, but we're not quite sure about what will be the intensity. If it's going to be just a war of words, or is there going to be any kind of military action, and what kind of an action can be taken by the Western nations? Because what they did to Russia is not something which I think can be done to China, given the fact that a large amount of Western investments reside in China right now.
I'm glad you've sort of reminded what the commentary was before Ukraine, and it was exactly this, that it won't go that far. Even if it starts, Russia will wrap up this war in a week or so. It won't make a difference to India. And we've seen all of those things really being reversed and not really playing out. Madhavi, Arora, what are you looking out for in the coming few days? Because the interesting thing is that the growth outlook has remained constant. There is optimism in the commentary as far as discretionary demand is concerned. Economic activity seems fine as of now. Even that inflation doesn't seem to have dampened economic activity. Are those some of the factors that are heartening?
To some extent, yes, because that also implies that the demand side of the economy looks still resilient, which also would imply that your core inflation, which is a proxy of demand, could also remain a tad sticky, not only just from supply side, but also on the demand side. That said, I think, situation globally is also quite fluid, and macro assessment might require frequent adjustment ahead from the policy perspective. To that extent, I think we're closely watching the global pace of inflation deceleration and how the impending recession sort of shapes the DM central bank policy, because it could, have a major implication for the RBI as well. Just to note, recession generally is a very, very strong disinflation agent. We don't know how things really pan out, because globally things are so fluid that probably 3 months down the line we'll have a very different picture to play out, and the world will be a very different place to really discuss as to where the policy stance of the rest of the world is going to be. So I think we need to watch out for global policy stance is a very important factor rather than domestic dynamic, because whatever RBI has done in the past 3 months or so, 4 months or so, in terms of even the change of pivot, was largely because of global externalities and not because of domestic demand issues or domestic inflation issues. To be sure, last 25 years, if you see, 6% inflation has been, on an average, the most probable outcome that we've had. So for India, the threat with inflation is not very new. We have seen 6-7% inflation in the past as well, and policymakers have dealt with it their own way. I think the recent policy reaction functions of the RBI are largely driven by what is happening in the West and not necessarily driven by totally what is happening domestic in the domestic dynamics.
I actually want some commentary on that. Mr. Pan, let me come to you on this question. The narrative right now and the messaging right now is that, yes, globally the situation is a bit sticky, but India is better placed than other nations. Our domestic economy is strong, our fundamentals are good, and we will tide this through. Do you echo that sentiment, especially, when the finance minister says there's no question of a recession or a stagflation?
Well, I think it's a very sort of difficult question to answer at this point in time, in the sense that if I really look at the growth dimensions for India, I do see a significant amount of soft spots that are there. In the sense, I think even the RBI governor did point out to the fact that the rural demand is not sort of ramping up. Rural wage growth is quite weak vis-a-vis the inflation that we see at this point in time. And if I look at the MNREGA demand for labor, that is significantly higher than the supply of labor, which means that most of the migration that had happened out of the urban to the rural may not have been reversed. Rural unemployment rate also is a sticky problem. So we will definitely not have a recession, because we still have a significant pool of people who would pull consumption, if not the discretionary consumption, the essentials. And private consumption expenditure in India is more than 50% of the GDP. What crumbles from now on, in my belief, is the export side of the picture, while imports remain sticky, which means the net trade will be a drag on the economy. And what I'm hoping for is that the RBI, the government continues to stick to its grip in terms of the capital expenditures. That would be a significant buffer for the economy. And hence, I do agree that there is no recessionary trend for India, but I do anticipate economic growth to become slower as we get into the third and the fourth quarter compared to the first half of the year, on the basis of high inflation that is hitting personal consumption, and also the interest rate increases by the Reserve Bank of India, along with the global slowdown and its pass-through effect to Indian exports.
Madan, the statement from the Bank of England yesterday talking about the UK going into a recession. We know the story with the United States, a technical recession, but not really. How do you see these developments going forward? Is the worst yet to come as far as the global economy is considered? And where will India stand?
I think it looks as if the central banks and governments all over are cognizant of the fact that inflation is an issue, and as you keep slowing down the economy, there will be an impact in terms of overall growth. Call it recession or a slowdown, whichever way it is. That is something which has been accepted. So I think this prompt action which has been taken, I think is something, and the fact that everybody is aware of it will ensure that it doesn't exacerbate. And I think that the worst of it is probably over, and we may not really be seeing these kind of negative growth rates. But definitely a slowdown for India in the West means that our exports get affected, your investment flows will get affected, either positively or negatively. One is not quite sure that if there's a recession in the West, will the investors start looking at emerging markets, which are doing relatively better, or will they generally clamp up and say that, look, it's not time to invest right now, let's wait for another year? One is not sure about it. But India being primarily a domestic-oriented economy, I think our overall growth story will remain more or less in place. The more important concern for us is that whether inflation will erode consuming power, especially in the next few months, which is going to be the festival come harvest season. Our theory so far has been proved wrong, because if your GST collections are going up, even though there's high inflation, there's the Ukraine problem, it means that consumption has been very buoyant. But just remember, bank deposits have slowed down. I think consumption has been at the cost of financial savings.
Madhavi, just your take on this. India's resilience right now, relatively speaking, all of this narrative that 7% is high, but yes, India has seen higher. Our consumers are used to higher, so it shouldn't, hurt us so much. And how do you see us faring as the world gets more and more uncertain?
See, India, even if we decouple for a shorter period, I doubt that, we'll be able to sustain that decoupling for very long. Historically, also, we've seen that whenever India has decoupled from the West, it tends to sort of catch up very fast when the slowdown happens back home. So I don't think that, we could, sort of keep ourselves insulated from what is happening around the world. Of course, we are a domestic demand driven economy, so that sort of gives us first level of insulin. But beyond that, I think you tend to flow with the world. When the US sneezes, everybody will, generally catch the cold. So I doubt that, we would be able to sort of, sustain a very high rate of growth if the world goes into a sharp slowdown.
Absolutely. It's interesting times. And, that one takeaway that the RBI will be there, will do whatever it takes. For Governor Das, that's actually been the motto ever since he took on this job. He's had one curveball after the other, and it doesn't quite stop there. Thank you so much to all of you for joining us today to break down the monetary policy.